Hello again. We've seen a flurry of Eurozone GDP releases, with the best of a relatively poor bunch being Germany, which avoided technical recession. And I've been to speak to Anita Paluch from Gekko Global Markets about the numbers. Well, thank you for talking to me, Anita. I know you're a little bit sick, but let's start with the German GDP data. Marginal growth of 0.1%. I just want to know why you think it's not better, because we hear that domestic consumption in Germany is meant to be okay, and also the euro is relatively weak for exporters. So why is Germany not prospering more?
That's all right. We have seen the GDP numbers as very disappointing number. Everyone says that, actually, and I agree with that. I mean, 0.1% quarterly growth. That's not really massive. That's not impressive at all, especially when we're considering Germany as the powerhouse of Europe. Everyone is hoping that Germany will pull out everyone out of the recession. So seeing that number, that's not really comforting. And it's even worse when you look year-on-year numbers. It's showing actually contraction. So given those numbers, I think it's time to look at the austerity measures. I mean, we have seen the austerity measures have brought some results, right? The excessive debt has been reduced, but I think now it's the time to think about the growth, which has been an issue for a while now.
Yeah, this must mean a change in policy, doesn't it, for the Eurozone, because this is conflict between the likes of France. You see their finance minister there, President Hollande, saying we need more growth positive measures. Don't these results add to that argument?
I think they add because there is certain fatigue with all the austerity measures, and we have seen not that long time ago the 1st of May marches, which usually are the marches of the workers. They turned into protests against all those austerity measures. People are feeling those austerity measures, as mentioned before, they have helped out with the balance sheet, with all the debt, but they are now feeding through to the social fabric. And we are seeing like results much larger, much wider than just financial markets. So it's time now, I think, to think about more wider measures in terms of thinking about growth. What can be done to increase that? Yeah,
let's turn our attention to the second largest economy in the Eurozone, France. Some people are calling it a recession. I'm not sure. It's 2 quarters in a row of 0%. They really have to address competitive problems, don't they? Because there's these arguments that the French labour force just isn't flexible enough.
That's correct. I mean, yes, France, as it's shown by GDP numbers, has slipped into recession, which is sad. It's the second largest economy of Europe. So it's kind of disappointing again, because with larger economies, they have a much larger weight on the whole region, and as such, this is really bad, poor results. And France has different issues that they need to address, like the rising unemployment, a very inflexible workforce, and also the waning confidence in business and in consumers. So this all in all shows how important it is to address the growth issues.
Yeah, so generally speaking, for the Eurozone, where do you think we are with the story? Do you think we're going to see more large contractions of GDP? Are we bumping along the bottom, or are we going to go up from here?
That's a very good question, actually. I mean, there's been some hopes in terms of growth in 2013, and that the economy, seeing broadly, will actually pick up, and it will help, and it will improve, and all that. And the first results we have seen are actually very, very disappointing. So there is still room for growth in the second half, but given this very, very marginal growth in Germany on quarterly basis, and even not on yearly basis, it's again a question as to how to improve that. So I think that's room for politicians to show their ways.
Well, many thanks to Anita there for speaking to me despite being a little bit sick. Stay tuned to Dukascopy TV for more interviews, but for now, goodbye.